The price is the greatest tool of misdirection.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault. My name is Shane Moran, and I'll be your host for this week's episode. And from the entire Live from the Vault team worldwide, we want to thank you for your continued support. You know, as you can imagine, this community keeps growing more and more every single week, and there's a lot to talk about during these historic times. And Andrew Maguire is in the house with an industry expert by popular demand, the one and only Andy Schectman. So we have two Andys, and they'll be talking gold. This is going to be an amazing episode that you don't want to miss right here. And Live from the Vault, you know, gives you access to information and updates that you just can't get anywhere else. And this episode is going to be no exception. So just before we go to Talking Gold with Andrew Maguire and our special guest, Andy Schectman, please help spread the word about this channel by liking, by sharing, by subscribing, and hit that bell if you'd like to be notified as each episode goes live. So let me introduce our special guest in case you haven't heard of Andy Schectman. He's the president of and owner of Miles Franklin. And prior to starting Miles Franklin back in 1989, Andrew became a licensed financial planner specializing in Swiss franc investments and alternative investments. And his company is a company that has eclipsed $5 billion in sales, and he's responsible for overseeing the firm's operations and business functions, and he's become one of the world's leading experts in the precious metals space. And with that, let's head over to the UK and Talking Gold with the one and only Andrew Maguire and our special guest, Andy Schectman. Over to you, Andy.
Well, this is truly actually a huge pleasure for me to introduce another Andy. And it's Andy Schectman, somebody who I hold in extremely high esteem. I've met Andy. I mean, actually, I've only physically met him once, which was in London, 2011, at the GATA Gold Rush conference. And but it really is a pleasure to see you again, a man of great integrity and honor.
Wow, thank you so much, Andrew. It's wonderful to be here. And I'd be lying if I said I haven't followed everything you've been doing for a very long time. So it's great to be here. It's great to see you. And I'm looking forward to this very much.
Yeah, and timely. And I think perhaps we start, Andy, with, and as I say, we were talking earlier, I think this is the unique, usually when I speak to people at your side of the pond and traders and wholesalers, etc., really have a very US-centric view. You have a footprint everywhere, and I think this is really good timing. And I think the elephant in the room, and I know you've seen it, I know you know it, is the massive disconnect between the paper markets, the physical markets that we jointly interact with. Now, you're exposed to the wholesale markets as well as you're very active in the retail markets, which is something that is really useful. What are you seeing from your perspective, my friend?
Well, I've been talking about a kind of a top-down supply chain issue where, you know, we look at all of the information that's talking about the LME being bled dry to its lowest level of inventory in silver since they started keeping records, I think, in 2016. We look at the massive drawdown in silver off of the COMEX to where we're at about 38 million ounces in registered category. This is the registered category are the bars that are available for immediate delivery. That's the amount of silver that the Bank of India imported in the month of August. So you have the price setting mechanism of the world with about as much silver in it for delivery as the Bank of India imported in 1 month. That's not a good thing. We see 100 million ounces drawn down from SLV and other ETFs over the last several months. We see from the top down the biggest money in the world, the people that are closest to the information, quietly and using the suppressed price, Andrew, to run cover for their massive acquisition and removal of counterparty risk off of the world's exchanges. Now, this right off the get-go is really, really unusual. And I think this is what gives me, and has for quite some time, great optimism that we're on the right path. Now, if we follow that progression of events, we look to the refineries around the world. And I jotted down some notes before I met with you, just so you understand. So we've talked about the massive withdrawal of metals off of the exchanges. Now let's look at the wholesale market. Umicore, one of the largest precious metals recycling business, is over capacity and won't take on new accounts. Asahi, who bought Johnson Matthey, they won't take any new customers because they can't already fulfill current demands. Metalor, they can't accept any new accounts. The Geiger Mint in Germany, no more capacity. The mints in Turkey are interesting, both IGR and Nadir. There are government issues where metal is really tough to get it out of the country these days, where we just can't see much of any inflow into the United States out of Turkey. Pamp Swiss told us that they're not giving any new allocations probably till January, and much like Valcambi, both Swiss mints, the reasons they said that is they're concerned about energy, about not being able to keep the lights on because of what's going on in the Ukraine and Russia, obviously. And so when you talk about the refineries that provide bars to the industry, it's getting unobtainium. Now we talk about the sovereign mints. You look at there's 6 major mints in the world. There's one in your backyard there in the United Kingdom. There's South Africa, there's Australia, there's Austria, there's the US, and there's Canada. All of which have been, over the last several weeks and months, really the model of inefficiency. No one quite as bad as the United States Mint. But in all the years I have done this, Andrew, and what's interesting about this is in the context of a falling price, one would associate falling price with an increase in supply because demand and supply move inverse of each other. And if the price is falling, one would assume there's no demand, which would mean a plethora of supply. In the 33 years I've done this, Andrew, I have never seen anything quite like this, with the exception of 2008, when everything within a week just was gone. And that's a discussion we can delve into whenever you'd like. But what I will simply say to you is that right now, I think the whole world has awoken to inflation, to anxiety, to war, to currency debasement, to political and geopolitical, to divisiveness, all of these things that are spinning and spinning and spinning in every different direction. And all of a sudden, people are waking up. So the metal that used to flow to the U.S. from the U.K. and Australia and Austria and South Africa, it's not anymore. And within a matter of the last few weeks, getting product has become really, really, really frighteningly difficult. And so, yeah, it's. I guess I could sum it up in one sentence, Andrew, and that is that the price is in nowhere even the same ballpark. A reflection of demand, which is many, 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 many times greater than what the price would tell us.
I mean, this is fascinating stuff. People have to listen to this. And you're talking about, you've just talked about a wholesale market condition. People forget, they tend to think about the market buying gold and silver in coins and small bars, but you're talking about the wholesale market here. And you just raised something which is not being mentioned by many people that I know. It is the energy constraint. And for example, I think 2-3 weeks ago, we went to Valcambi and they said, no, we're not taking any more silver orders. Well, why would we? Well, we have this bandwidth of we're being metered on our energy usage. So why would we? It would be more efficient for us to refine gold, but even then, that's constrained. So we're now finding, and Andy, I don't know if you're finding the same thing, but we've been the last few days. I've never seen anything like it in my life. I've never seen wholesale kilobar premiums in Dubai, $13 to $15 an ounce over to get any size at all. And you're lucky to get any size. This is mind-blowing stuff.
Yeah, it is. The premiums are a reflection of supply and demand. And As one of only 27 U.S. Mint authorized resellers in the world for 30 years, we've been doing this for 33. The last 2.5 years, everything has gone upside down since the pandemic. Everything. But let's say you called me, Andrew, on Thanksgiving Day, which is the third Thursday in November here in the U.S. You called me on Thanksgiving Day and you said, hey, I'd like to buy 10,000 Silver Eagles from you. What will you sell them to me for? I'd say, sure, Andrew, I'll sell them to you at $3.19 over the price of silver. And you'd say, well, what will you buy them back for if I call you on Christmas Day? Well, Andrew, I'd pay you $2.65 over. And those numbers were pretty much consistent my entire career, going all the way back to 1989. If you would have called me 3 months after, in March, and said, hey, you know, those coins I bought from you, what are they worth now? I would have said I'll pay you $11 over the price of silver. Right now, at $16 over the price of silver, on Silver Eagles, we'd be the least expensive in the United States. But it's not just the American Eagle any longer. You have the Britannias that are selling at north of $7, the Maple Leafs at north of $8, all of the bars north of $4. I mean, these are numbers that are 3, 4, 5 times greater than anything I've ever seen in my career. And what's really interesting is Rick Rule, a buddy of mine here in the U.S. who's kind of the Pied Piper in this industry on my side of the pond. He talks about the allocation of metals ownership in the United States from the Harvard Endowment Fund all the way down to Joe Sixpack is less than 0.5%. So it's the pimple on the elephant's ass, Andrew. What happens when the elephant turns around and says, my God, look what's happening. I need some gold and silver, and like that, it's over. And I've been saying this for 2 years. I've been saying for 2 years that product is getting hard to get, that getting clients is easier than getting product. It never was that way. And this market will ultimately define itself by an inability to source product. I've been saying that because I see this event mathematically and economically and logically ultimately coming. And I get a lot of heat for it. Yeah, you're talking your book. No, I'm not. I'm seeing what's coming. And if this is what it's like when there's not even 1% of the public has assets in metals, what happens if it gets to 5%, a lowly 5%, which would represent a tenfold increase in demand in the United States? And much like the open interest on COMEX right now being 1,750% greater than the registered bars in the vault, that's what's going to happen. The word rehypothecation, the word where you think you're going to have access to gold, you're not, and silver. And I think it's only going to get worse as people wake up to what's coming.
Wow, and I think the clues are all there. I mean, if people just want to look, and obviously, I think a lot of the problem that I find is that we had to get rid of all our US clients. I think back in 2013, we were told we're going to shut you down, you're going to close your accounts, you don't get rid of all your US clients, and then all of a sudden, bang. Now US clients aren't allowed to trade foreign exchange gold, the over-the-counter market. So hang on a minute. Why? Oh, because they've been siloed into the casino. I call the casino, and so now you've got the market-making bullion banks who silo the US trade, the hedge fund herd, as I call them, into the COMEX, have no capacity to actually even view what's going on. But yet the market makers have a footprint in both markets. And then I think it was Rule 50 something, you probably even know it better than me, but whatever it was, I think about a year later, they talked about like halts in the market being implemented. It never seems to be on the way down, but halts in the market that were where you could actually freeze COMEX price for 5 minutes and the options market for 3. And yet the same bullion bank traders, and I can, and non-US traders, can actually trade the spot markets while it's frozen. I mean, this is, to me, to think that this is not a rigged setup is quite phenomenal to me.
Oh, it is a rigged setup. When you see JP Morgan, the largest bullion bank in the world, not only pay $920 million fine to the Justice Department for rigging the market, when you see their head trader, Michael Nowak, plead guilty to other spoofing-related charges and texting with other commercial banks, and he was found guilty, hasn't been sentenced yet, I don't believe. But the fact is, they admitted to it. When you see Bart Chilton, God rest his soul, who on Chris Marcus's podcast admitted to all of this happening, to where he went into his superiors and say J.P. Morgan is in violation of antitrust law. They need to be prosecuted, but was told it's a political decision, back down, and he passed away a week later. I'm not saying there's any relation to that. Maybe it's just a coincidence. But the point of it is, with all of this stuff documented, they're still allowed to be the administrator of the world's largest silver trust, SLV. Yeah, it is a rigged market. There's no question about it. But Andrew, I would submit that the only way you can successfully manipulate a market over time is to push it in the direction that it is going. And you and I are old dogs in this. We've been doing this for a very long time. And for a very long time, the U.S. was considered the bastion and island of safety. When times got tough globally, everyone rushed into dollars. And I would submit that this is a waning phenomenon. And when you have the Western markets, and when you have gold and silver denominated in dollars, and the dollar is losing its global appeal, so too is the ability of the cartel to suppress the price. And perhaps when you think of the no-look pass in basketball, or any misdirection in any sport or game you have ever played, understanding that the book The Art of War, which is all about misdirection, is taught in every major business school in the world on corporate hierarchy, and in law schools on formulating arguments, and it's mandatory reading at West Point, and it's CIA. The world understands misdirection, and when you see the price being suppressed, yet the world's exchanges being bled dry, when you see record premiums, not just in the Western markets, but on the Shanghai Gold Exchange and in Dubai and other parts of the world, it tells you that the smart money, who's closest to the information spigot, is using this misdirection, is using this suppression in price as a last-ditch effort to clear themselves, I think, to get metal and to reposition themselves before it becomes obvious to the elephant who is still grazing out in the pasture, when the little pimple on his butt is screaming, turn around, turn around. And we're getting there. I really do think we are. And you can see it by the bleed down of supply in an environment where everything in your mind should be, well, why would anyone want metal when it just does nothing but fall in the midst of 40-year high inflation and chaos globally? It's an archaic relic. It's exactly what they want us to think, and that's exactly why they're able to bleed dry all of these exchanges.
And the dots are there to see. One only has to look at the backwardations. In looking at the silver market in particular. I mean, it is so blatantly obvious that when the so-called deliverable physical market, we all know, as you've just outlined, the spot price that's fixed in London is a ring-fenced little affair where the price is not what you can buy it for. You've just outlined you can't buy it for that price. Nobody can buy it for that price, and it's not even available at that price. And the refiners are not even producing it because there's such a restriction. So what amazes me is that people don't actually look at the hedge fund herd, which is really the issue here, who are chasing from pillar to post. They are led by the nose to chase from pillar to post, not even realizing the things that you've just talked about. If only you could get a meeting with somebody that is big enough to actually trade and understand that, my God, hang on a minute, why are we racing from pillar to post here? Why are we digging a hole for ourselves here when we know, if you look just beyond the casino war, there's a whole real market? And as you've said, and I think this is interesting, you've just suggested to it, the physical markets are becoming more liquid, and the paper markets, i.e. the COMEX, is becoming illiquid. You're seeing this.
That's a very interesting point, and it's very true. And the physical market is incredibly liquid. I mean, I would love it if someone called and said, I have $10 million worth of silver bars to sell you. I'd pay them as fast as they could blink. And I think that's an environment where product is literally disappearing as fast as anything I've ever seen. And it's concerning, Andrew. It really is. And I think it also perhaps is a precursor to what's coming next. Why is there such a scramble to get all of this stuff in your possession. And I think a lot of it has to deal with the fact that there is a growing coalition of countries that are moving against the Western hegemony. And I think this is the most important thing in the world, that, you know, when you take a look at the Belt Road Initiative with all 13 of the OPEC member countries on it, when you take a look at the BRICS nations, who Saudi Arabia just came out while in a meeting in South Africa and said, we are going to join the BRICS. South African president and the Crown Prince of Saudi Arabia both acknowledge this. When you see these are the countries that produce all of the world's commodities, they produce them, they import them, they are money to them. When you see the fact that you have a Moscow exchange who realizes all of this, or the talk of a Moscow exchange, which would appeal to all of these countries, where they can set the price for gold at a realistic price, call it $3,000, set silver at $50, $75, $100, and bang, like that, all of the Western markets would arbitrage directly to the east to capitalize on that. And you set a real price, you will break the COMEX, you will break the London Metals Exchange. Maybe this is becoming obvious, but what I will say is that I do believe that the Western dominance is going to be challenged by the BRICS nations, who have just come out and said, we are going to issue a world reserve currency to challenge the dollar. It will be pegged to currency, or to currencies and commodities. And then you have them say, and by the way, we're going to issue a new exchange where metals can be traded freely, to break the dominance and the manipulation of the Western system. You know, these countries don't bitch when the West hold the price down so they can accumulate as much as they possibly can on the cheap. But when the tables turn, I think the people in the West will understand in a matter of milliseconds what this really means. And, you know, you light a fire to all of this by these idiot senators in the United States who have issued a bill to remove the Patriot missile defense system from Saudi Arabia. Now, these are the politicians who don't understand that the dollar is the dollar because of our protection of OPEC, Saudi Arabia in particular, with all of the 13 countries on the Belt Road Initiative, with us pushing Saudi Arabia away, with us sanctioning Russia, and the unintended, or maybe they were intended, consequences that are terrifying to countries like Saudi Arabia and China. We don't want all of our assets sanctioned. We don't want to be frozen out of SWIFT. Why do you think China has sold bonds for 7 months in a row, over $120 billion? The handwriting is on the wall. These are the countries that are draining the exchanges and taking all the metal over to the east. And I think we'll wake up one day and we're going to see something that is going to be a spiritual, religious experience for many of the people who think wealth revolves around stocks, bonds, mutual funds. And I think people like yourself and others who are out there talking about this are going to be owed a real large debt of gratitude. And I won't be the one to say I told you so. I think you and I are out here on a limb trying to get people just to open their eyes a little bit and look past the narrative, look past what we've all been taught to do, and look past our borders. You can see a group and a storm brewing right now that is directly going to challenge the dollar and impact precious metals prices maybe for the rest of our lives.
Well, Andy, every single person you touch with your words is waking up to this, and I think this is why it's so important. This is education is power. I mean, and the fact is, I mean, everybody I meet, and it's not just in the gold and silver world, but everyone I meet, they're really fed up with this whole sort of wokeness, this whole situation. I better not get too into it. They'll start pulling the video, but you know what I mean. It's like, but essentially, people just want to take responsibility for themselves, and by buying gold and silver, you are literally in physical form. Come to you, whatever, just to get physical gold and silver and put it somewhere safe. Then basically, what you're doing is taking responsibility for yourself. You're not playing this debasement game. And I think that brings me on to a kind of a question which really would value your opinion on, is that, you know, see the dollar index. I mean, we did 20-year highs, I mean, and I get people talk to me all the time and say, yeah, but hang on, gold's volatile. No. You just go back to 2002 and then take a look at a chart and you'll see that, well, in 2002, when the dollar was at these levels, gold was like $300. I mean, pound gold was like 200 and something pounds, I mean, no, I'll give you a head shake because then clearly it isn't volatile when you look at it in those terms. But do you think the Fed will actually intervene because basically the dollar, when it's strong, I mean, foreign banks have to use the dollar. I mean, 70-80% of the trade is done in dollars. So when you use dollars to buy stuff, then you have to hedge that short in your local currency. So you're shorting the dollar. Now, then you've got a dollar squeeze. I mean, what the hell? This is causing chaos, global chaos. So do you think the Fed will step in and say, hang on, we got to start reining this in, or is it just not going to happen?
Well, I don't know. You could look at it maybe as a way for them to kind of squeeze Russia. I don't know if they would be that naive to do that, because if oil is valued in dollars, until it's not, until OPEC says we're going to open it up to other currencies, and then all hell breaks loose. But, this dollar screaming higher with agricultural and energy prices denominated in dollars, well, first of all, it's a colossal tax on emerging markets. But a lot of these countries won't buy as much oil because it becomes too expensive. And do I think that they'll step in to intervene? Yeah, I mean, you do think they will. You have to think they will. The bond market thinks they will. That's why you have an inversion of the yield curve. Because if you raise rates high enough, which attracts more interest in the dollar, you're going to blow up the economy. You're going to blow up the stock market, the bond market, and the real estate market. And what's very difficult, it shouldn't be difficult. It should be easy for people to understand. This is why the bond traders are saying that they're going to pivot. That's why you're seeing higher rates on a 2-year than you are on a 10-year. It shouldn't be that way. They're saying that because you have 3 years worth of money printing that is greater than anything ever prior to the entire history of the United States. They printed more money in 3 years than they did in the entire history, and that blew up asset values to all-time highs. If you continue, as the Fed continues to raise rates, not only does it put a colossal tax on the entire world, it gets the United States that much closer to a collapse in stocks, bonds, and real estate, the 3 pillars of wealth in this country. And at some point, this becomes a big problem. It's either death by depression or death by hyperinflation. And I think the betting, the smart money, the bond market, says they'll go death by hyperinflation, that as soon as it gets too painful for the markets to handle, they will step in. They will start to ease, lower rates, try to lower the dollar's value. But I don't know when that breaking point is. And probably sooner than later. I think, you could say they're talking about a 75 basis point increase in the next FOMC meeting. Well, if instead they only do 25 basis points instead of 75 basis points, as far as I'm concerned, that's a pivot. So I guess we'll have to see. The bond market, the smart money, they would say yes. And I don't know how far a gentleman whose hero was Paul Volcker, being Fed Chairman Powell, don't know how far he's going to take it to the mat.
Yeah, and it was interesting. Just and we sometimes we were speaking to some clients the other day, and we were talking about, hey, the Bank of England 2 weeks ago, QE, right? I mean, there's no other word for it. QE turned on the QE fire hose. Okay, albeit just for a moment, but when we go back to 2008. And you've raised 2008 several times, and I see so much of what you're seeing. In fact, I just did a little episode about and raised. It's interesting because I was talking about 2008 and you talking about 2008, but it was the Bank of England that started the QE fire hose back then, and that was. And then we saw 5,000 people coming out of Lehman's offices with boxes. I mean, now that brings me to. And okay, this is not confirmed, but I'm just wondering if you've heard what we've heard, is that we have a contact at Credit Suisse. And We've been asking them now for 2 weeks, you're going to shut your commodity desk down. I mean, but basically, we've been asking them for 2 weeks. Is there a problem? Have you got a problem? And they're not denying there's a problem. And then I understand that the Fed is actually swapping dollars into switch. Do you know anything about that? Because I see this as a potential Lehman moment, because their derivative exposure is enormous.
No, I know just what you know. I've read the same articles, and not only, when you talk about it's not just Credit Suisse, and just like it just wasn't Lehman, and you hear that they were staring into the abyss if they didn't bail out AIG. What they're basically saying is, or what they were saying back then in '08, is that everything is systemically tied together, incestuously tied together. And a bank like Credit Suisse, which has branches here in the United States, they're all tied together with derivative exposure. And no, it's a frightening thing for sure. And when you look at 2008, they should have just let the forest fire clear the forest, because back then the Fed had a balance sheet of $800 billion. It's now about $9 trillion. So over the past 12 years, when everyone thought hope springs eternal and all you need to do is put your money in equities, well, they've been right, but they've been right because the Fed bought $9 trillion worth of interest rate sensitive assets, bonds, and mortgage-backed securities, which kept rates low, which created this illusion of prosperity, but which also was a gross distortion of and misallocation of resources and capital, which has created no price discovery. And so you see a moment like this, where a Credit Suisse moment, it's going to be big trouble. And maybe this is exactly why you're seeing so much money in the reverse repo market, like $2 trillion. The banks don't want any money on the street. They would rather give their money to the Fed with safety overnight than to borrow it out and leave it out on the street. So the banks are reining in credit, and this is going to be an issue, because just as massive credit expansion and a deluge of money creation created prosperity, so too will a massive contraction of credit, which you're seeing, and the reining in of money, not giving it to anyone for everything anymore, ought to have the opposite effect. And so I think, all of these things then mixed in with the big money pulling all the metal off the exchanges, you put it all together, you start to see that the big money sees trouble coming. They're going to limit exposure to the street. They're going to limit risk by giving the money to the Fed overnight instead of the public. They're going to pull all the metal they can off the exchanges, quietly using price as the tool of misdirection. So I don't know. I've read the same things you have about Credit Suisse, and certainly Credit Suisse and Deutsche Bank and all of the banks in France. There's a whole bunch of banks that are on life support, and all it will take will be one of them to light the fuse. I guess we'll have to see, Andrew. But these are the reasons that I think it's important that people understand that when I talk to people about using gold and silver as a vehicle to protect oneself, it's not an investment, it's wealth. It's wealth that's lived through 2 world wars and German hyperinflation and the Great Depression and every pandemic, and is still immutable wealth. And while we are in a very scary boat of uncharted waters surrounding us, I still think the safest place to be is the life raft that is a 5,000-year-old gold and silver life raft, and look at it as wealth. And if you own enough of it, you'll be wealthy. Might even allow you not just to survive, but to thrive in what is coming. But certainly I don't sell it and don't advise anyone buy it to get wealthy. Buy it to get the hell out of the way of what's coming down the pike, and it would be a Credit Suisse default and setting off a chain of events systemically across the globe that could very quickly make people understand. This is why they imposed bail-in legislation in the United States. This is why they imposed money market gating legislation in the United States. This is why the biggest money in the world has been suppressing metals and draining the exchanges. This is why we've seen record insider selling on strength in the equity markets. I mean, if you put it all together, in and of themselves, these little pieces don't amount to as much, but put them together, and I owe you, and you alone, the biggest debt of gratitude because of your education on Basel III, on gold's reclassification. and just how serious that really is, because the biggest money in the world for the last several years has been quietly accumulating gold and doing it using price suppression as cover. If you understand that if price was that big of a deal, then why the hell is the biggest money in the world in the central banks, in the commercial banks, in the family offices, in the sovereign wealth funds, and the retail market and the wholesale market? Where the hell is it all going? And if it wasn't really anything to see anymore because the price isn't doing what it's supposed to be doing in this chaotic world we live in, then where the hell is it all going? And who the hell is taking it all? And I owe you a real debt of gratitude for opening my eyes. That one moment I view as the single biggest event of my career. Learning that the Bank of International Settlements looks at gold just a little bit differently than they did for the last 100 years. And I think it's really important that you get credit for that, and have much respect for allowing me to see the world very differently since 2019.
Well, that's very kind of you to say. And I think I think it is a pivotal moment, and definitely was, because whereas I think what triggered the implementation, or brought the implementation of Basel III forward, was the EFT blow up in 2020, when they saw the too big to fail banks getting caught in a bid only market. Whereas the liquidity providers were sitting there with longs, suddenly the market turned around. But there's no physical. Suddenly COVID hit, no physical. The refiners were shut down. Hey, deja vu almost in a way. And then suddenly everyone turned to the liquidity providers and said, "Okay, you got some over the counter longs, give it to me," all at once. And they just had to race to cover those shorts on the COMEX, and what we had at $80, $90 spreads, until there was a massive scramble to bail these guys out. And of course, the only people who got bailed out were the Goldmans, the JP Morgans, the big guys, all got bailed out. But we were dealing with second-tier banks in Europe. You know all the names, all the second-tier providers. Most of them just bailed, said, we're out of this business. And they even got out of the profitable side of that business, which is just simply buying it for clients. And it was just amazing to me. What happened there is still unappreciated as to what's going on inside this siloed world. And so leading to the question, basically, there's a little mechanism which I know, and that can be utilized, called the EFP, the exchange for physical, where you've simply got the ability for, as a market maker or as a very large client, to actually take a COMEX position, move it into the over-the-counter markets, which are, by the way, Basel III compliant, which they weren't. And all of a sudden, and no wonder the BIS started covering off their swaps and their shorts. So really, you've got this mechanism. So we're seeing these outflows. And if you can't buy physical, why wouldn't you, Andy? Why wouldn't you, as a size buyer, turn to the COMEX and say, excuse me, I'll take that. Thank you very much. So are you seeing it? We're seeing it, but where's it going? Where's this bullion going?
Well, that's the point. And you're not seeing an increase in the eligible category. So if you would think if it's taken off the registered category, which are the bars for delivery, then you would see a corresponding increase in the eligible, which means it's held with warrants in strong hands. No, it's not. I think it's going eastward. When you realize that 38 million ounces went to India in the month of August, where do you think it came from? And so a lot of it is being pulled off the exchanges by smart money, by the central banks, by the commercial banks. And when you look at a silver market that is rehypothecated by 1,750%, you don't have to look any further than the crypto exchanges, who just blew up because of rehypothecation. Rehypothecation never ends well, and it won't end well here. This is what the Hunt brothers noticed in 1980. This is what the entire big money is realizing right now. This is why they're pulling it off while they can. To your point, give it to me until you can't get it anymore. When we only have 38 million ounces backing the entire price-setting mechanism of the world, it's happening. And this is the point. They are quietly exiting stage left until the spigot is turned off and they say no more outflows. Well, at that point, the market is exposed for exactly what it is, a fraud. So I think you're seeing the biggest money in the world front run that type of a moment, which, much like the cryptocurrency companies that went belly up because they were rehypothecated, you could very easily see that. Now, I don't think the COMEX will blow up because the banks will protect themselves just like they did by changing the rules against the Hunt brothers. But I think what you will see may be something similar to what you saw on the LME with the nickel market failure, which I think delegitimized the LME to a great extent. And maybe this is why you're seeing the commercial banks pare down their short positions after that spiritual or religious moment, rather. And maybe this is why you're seeing so much drawdown ever since that March event. You're going to see the markets in the West, I think, be delegitimized as the benchmarks or the platforms for setting the commodity prices, when the rest of the world, which comprises 80+% of human population, are the countries that are massively accumulating it. You look at a country like Turkey, who has expressed its interest in joining the BRICS nations, ironically. They bought more gold the first half of this year than any country on the planet. So all of these countries that are moving away from the Western system, that are joining the BRICS nations, that are on the Belt Road Initiative, a new currency that's going to be pegged to commodities. Do you think there's any coincidence that they're buying the only other Tier 1 reserve asset? Do you think there's any coincidence that they're very quietly accumulating gold and pulling it off of the exchanges and silver, 38 million ounces to India last month or the month of August? Is there any coincidence that this is all happening now? And I think the answer is no. And this is why people who are bummed out about price need to take a step back and realize this is one big game. This is a global shift. The West has controlled the game for centuries, and I think the rest of the world, in and of themselves, even 10 years ago, couldn't stand up to the West. But now they're all joining together, and I think they all have economies put together that dwarf the West. They have military presence that put together, they dwarf the West. And they're building relationships based upon mutual trust and cooperation. They're building a relationship against the Western hegemony. That gets them to the table, right? But what is the glue that is going to solidify is the commodities they're all massively accumulating that is going to peg a new system. And I would submit there is no coincidence that the Chinese digital yuan, which has already done over 20 billion in successful trades, many of which are supporting the Belt Road Initiative. They started doing this in the Shanghai Winter Olympics. There's no coincidence that I think that China is front and center in saying we're going to issue a new world reserve currency on behalf of the BRICS. What better way to roll out distributed ledger technology to the world by now having all of these countries that are part of this new group pegging commodities to a distributed ledger technology. It won't be open source, it'll be permission based, but you will be able to see, and it won't be convertible, because de Gaulle from France proved that convertible currencies convert, but it will be pegged. And they will say the distributed ledger technology shows the immutability and the veracity of all of the commodities. Saudi Arabia just pegged oil. China pegged gold. Russia pegged fertilizer. I mean, whatever you want to say, whatever these countries are going to peg to the currency, it'll be shown with veracity and immutability on a distributed ledger, and it will very, very, very quickly disrupt things globally to, as Zoltan Pozsar calls it, a new Bretton Woods 3, a system dominated by by commodities rather than by debt instruments. So I think we're seeing these moves are not coincidental. What they are is a lot of the big players who know the script are clued into what's coming, and they are using price suppression to position themselves and to pull all of the metal off the exchanges and to get out of dollars and dollar-based investments. It's coming, Andrew, and I think that the price is the greatest tool of misdirection. You have to lift up the hood. The car may look brand new, but the engine has two squirrels on a wheel and rubber band turning the axle. So I think it's important to take a step back and not look at things from a micro perspective. That's my message to the people. And again, I don't miss anything you ever put out, because what you are saying from a wholesale level globally is very vital to the way I see the world. And so keep doing what you're doing, because without your information, I wouldn't have the message that I have. And I think you put everything together, looking at all these pieces. They don't make the story until you put them all together. And much of what I've been talking about, I owe to the information that you're bringing out to the public. So for what it's worth, from this side of the pond, you have a big admirer, and you're integral to my thought process.
Well, I'm going to encourage everybody to listen to replay what you've just talked about. That you've just summed up really it so beautifully. This is where we're going. People need to preserve their wealth. People need to position them to see what's going on outside of this herd of fools racing inside this casino, who have no visibility, who are the tool to suppress price. But outside, you've just talked about what's really happening. And thank goodness, you talked about bail-ins, you've touched on bail-ins, you've touched on all these things. People have to listen to what you've just said. And I'm so pleased that you came on today. And I would just love to keep talking to you. But, when we start to go over...
You'd never need to twist my arm, Andrew. I like I said, you're someone I've looked up to for a long time. So if you ever want to have another conversation again, please, I don't need much more than 30 minutes notice. I'll drop what I'm doing and I'll come on.
That's a date. And thank you so much. Andy, thank you so much for sharing your valuable time with us. And really you have my total respect.
Much the same, Andrew. I hope our paths cross again soon. And if you ever get stateside, make it to Florida. I got a steak dinner with your name on it. And next time I'm in the UK, you can rest assured you're going to know about it.
Oh, you got likewise. And I think we're going to put up a link to you, Andy. Obviously, I do recommend that what I can say is I know Eric Sprott, and I've always said, trust him. I know Andy Schectman, trust him. These are people that I know are straight shooters, and anything they do is correct. So I would definitely encourage people to get in touch with you.
Thank you so much, Andrew. Until next time, I'll certainly look forward to picking up where we left off, but I hope you and yours and everyone out there stays well.
Thank you, Andy.
Thank you, Andrew Maguire and Andy Schectman, for the two Andys and a fascinating discussion here in the precious metal space. And remember, buy physical and understand the difference between what Andy affectionately calls the casino, paper, gold, and silver markets and the actual physical gold and silver markets. They're not the same. Don't be fooled. And there you have it. That's all we have for you today on another episode of Live from the Vault. Please help keep spreading the word about this channel by hitting that like button, sharing this information, and subscribing. And if you click on that bell notification, you'll be notified as each episode goes live. And with that, we'll see you next time right here on Live from the Vault. See you then.